Welcome to the third best decision you've made in your life. The first one, of course, by following me on YouTube. The second one is joining the method. And the last one is joining this series. This isn't just another strategy video. This is the method that ETM would charge you for. The market doesn't move because of candlestick patterns. It moves because you, and thousands like you, are being lured into a trap. Today, we are pulling back the curtain on ETM's secret strategy. This is his bread and butter scalping method. This is a step-by-step guide. Part one of the series that dissects how to trade in lower timeframes and not hours like his. It took me 2 years to get to where I am. It took me multiple blown accounts. It took me days after months, weeks. Everything of just sitting in my room, studying, back testing. You know, it's not easy, but if you get the right knowledge and someone that you can trust. You know, so many people DM me on TikTok asking about trading, saying, what if it doesn't work out? What if it does? But I'm alone, do it anyway. Bro, am I good enough? The desire wouldn't be placed in your heart if you weren't. I'm scared, do it anyway. I'm trying to teach you guys as much as I know because I want all of you to be profitable. I mean, you guys are watching this. So I'm assuming that you guys can trust because not a lot of people can trade on the 1 minute, 5 minute, especially indices. So let's get right into it. We're going to do in this video. Wow, as horrible, I'm just going to type it out, market structure. We're going to do beginner structure because I don't want you guys to be confused with anything in this course because you spent the money on it. So why would you need to be confused? Mark structure, beginner mark structure, and advanced mark structure. So let's get right into it. Just like my YouTube video, if you guys watch it. There's 3 ways the market can move. It can move in an uptrend. It can move in a downtrend. All right. And then price can also just consolidate, which means it's literally just moving to the side. It's not doing anything. It's not hitting any levels we need. Uptrend price is moving up. It's bullish downtrend price moving down is bearish. So now what you want to look at with structure is the lows and then the highs. That's literally it. So let's mark up all this. So for beginners, you don't know what this is. We're going to do HH equals to a higher high, which basically just means price in this high is higher than the last high. Pretty simple, straightforward. Higher high is literally, it's a high low high because it broke this last high. So it's a higher high, right? And it keeps breaking. The last high, so it's making new highs. Price where to break it, lower high. We'll go over that next though. Higher high is HH. HL equals higher low. Okay, put this there. Little line here. Kind of organize this for you guys so you can understand. Make sure you're taking notes and you're really soaking this information. You guys have this for life. You guys can study this as many times as you need to. Anyways, right here is our uptrend. This is basing mark structure. Do high high. So HH on all these, because they're high highs. And then we will also have HL higher low. So it's higher than the last low. This is higher than the last low. That we just marked this low is higher than the last low that we just marked. And this low is higher than the last low we just marked. So delete these circles so I can kind of mark this up better for you guys. So for highs, boom. This high right here got broke. Break of structure. Break of structure is BOS. Okay. So that was our first break. What's this? A new higher high. Look what happens. This high got broke with this high. So this is now a higher high. Once again, this high got broke. For this is the new higher high. Simple, easy. Now for the lows. This low, let's just say, you know, it was higher than the last low. Say the last low was down here and did something like that. This is the new higher low right here because it's higher than the last one. It didn't break this. So once again, we'll just mark these as the lows. So if price breaks this level, this level, it's no longer a higher low. So higher low, this low printed above this low. So higher low, this low printed above this low. It's a higher low. This low printed higher than this low. It's a higher low. And this low printed higher than this low, making this the new higher low. So that's basically from the upturn. It's pretty simple. You know, this is just for beginners. It's not, you know, any in-depth detail of mark structure. Now, if we want to go do this quickly onto boom, look at this right here. So what do we have? We've got our channel, which got broke. But we're not going to worry about that. So we'll just do this. Okay, so what do we see? This is a low, correct? This is a higher low. Could say this is the higher low. Now, look what happens. This new higher low got broke, structure like this. So all these circles right here are higher lows. Correct. So this is a high. Higher, higher, higher. High because it's breaking the last highs. So these circles are high highs. Price breaks the low. What does that mean? We're shifting direction. We're no longer in an uptrend. So you could see price taps into this order block up here, the supply zone and tanks. Why? Because price broke this last higher low. Price came up, made a higher high, breaking this high, and now it broke the low, which means this right here is the new lower low. And now we've got pretty much all this up here as the new lower high, because it didn't break this high up here. So this was the highest point, the higher high. Comes down, price breaks as low, making lower low, price comes up. Make, wow, that's horrible, I'm so sorry, a lower high. So yeah, that's the shifted direction. We're going to go over that. And another, we're going to go over this in this section, but just not this video. So that's change character. We'll go over that probably next video in this section, because our mark structure is simple. It's just structure. And then the change is structure, change character. Anyways, back to the point. We had all of our higher highs here and then our higher lows, like we said. If you want to make it easier, you could literally just make channels like this to see where the market's going. It's very good. We'll go over that also in another section, that pattern, because 9 out of 10 times it plays out. So that's basically the higher highs. So if you want, high highs and high lows, uptrend, mark, structure. Now we're going to be going into bear structure, which is a downtrend, as you can see, just like this example over here. Over this first, before we get into the live example, we'll move this over so we can really get into it. All right, it's not letting us. Anyways, low, lower low, lower low, why? These lower lows, well, this low broke the low from up here. And I will just say price is something like this. So broke this low, made it a lower low, price came up down, made a new lower low. Because it broke this low, price came up, price came down, breaking this low, making new a lower low now for the highs. Simply lower highs, the last high was up here, price came down, making the lower low, price comes up. Doesn't break the last high, it's now a lower high, price comes down, makes the lower low, price comes back up to make what? Another lower high, because it didn't break this high. Same thing. Price makes a lower low, price now makes lower high because it did not break this last lower high. Once again, not breaking this high, this line right here. This is a downtrend mark structure, lower lows and lower highs. Uptrend, higher lows, higher highs, because the highs are getting broke and the lows aren't. Downtrend, lows are getting broke, highs aren't. Simple. Now for consolidation, it's just price isn't doing anything. It's not making lower lows, it's not making higher highs. None of this skin broke. Now, what do you want to wait for in a consolidation phase? You want to wait for a breakout to the upside or the downside. So if you want to trade off this, the price could come down to come up off this last low, or could take out all this, do something like this, break that, and then go to the downside. We're not going to talk about that right now though, because this has been beginner structure. So yeah, this is consolidation. None of these highs are getting broke, and none of these lows are getting broke, so price is just staying in the same spot. Basically, now for the downtrend structure, we're going to go on an actual example on the live market. This was literally today, this morning, I think during London. So we had our last higher low, last higher high. This is our higher high. This bad boy right here. And this bad boy right here was our last higher low. This up higher low. So what happened? We see price has now come up, break this high, made a new higher high. Price immediately came down to break this low. So right here, making a new, say it, lower low, lower low, not lower lower, boom, new, lower low, print it, because low is lower than this, broke the last lower low, I mean higher low. So now it's a lower low, I get it. It's not an uptrend sound, a downtrend. So if price is not higher than this low, it's going to be lower, it's simple. Price didn't come up to break this high right here. We'll make this line just to see, because we wanted to see if it would break. It didn't, and now we're close. So now this we will count as our lower high right here. So we'll mark this as LH. This is a lower high with the lower low. So now just continue with the last one. This lower low did indeed get broke. So this is literally our next lower low. Price comes up. Here, this little wick making this our new lower high, because it didn't break this high, these candles right here, price broke this low right here, making this a lower low, price didn't break this high, making this a lower high, price comes down. What is this? Our new lower low. What is this? Our new lower low. What is this? Our new lower low. Same thing for the highs. What is this? Our new lower high. And our new lower, this up. H for lower high. Wait for lower high. Low, lower low, new lower low, because price is continuously breaking these lows right. Price broke here. Price broke this low right here. Price broke this low right here. Now this being the new lower low right here, price did indeed break this one. So now this is our new lower low. Simply, once again, like I said, you can make a channel just to make it easier for you if you need to. That's a downturn, simple, easy. So we went from an uptrend right into a downtrend. And you easily could have caught this. You easily could have caught this. How? Simple. You see your level right here. Boom. Price broke this low. Price made a new lower low. It has to make a new lower high. Price comes back into our point of interest. Our supply zone comes down and takes a dump. It's easy. Once you guys understand it, once you guys really take in this knowledge, you're going to be like, this is crazy. So now literally for the consolidation, we're going to find something, a lower time frame, and make it a little easier. So let's not worry about this. So it's right here. Its consolidation price really isn't moving anywhere. You could see lower lows, lower highs, but in reality, on a higher time frame, it's consolidation. Price isn't doing crap. So it's not making lower lows, and it's not making lower highs, not making higher highs, it's not making higher lows. So you just wait for a breakout, boom, you got your breakout. Price could have tapped into this point right here and it could have taken off. Who knows? It's all probability. It could have came up here to tap into this drop, but it's really consolidation. As you can see, it barely took out our level. Took off, but we're not worried about right now. All worried about is consolidation. Boom, consolidation. Right here is simple. Price doesn't move anywhere. Price doesn't make higher highs. Price doesn't make higher lows. Personally, I don't trade consolidation at all. I stay away from it. That's why I really never post anything about consolidation, because it's pointless. And I mean, if you're in like New York session trading NARS, you're really not going to have much consolidation at all, unless it's like a news day. Like a bank holiday, and definitely not a news day, because that's when price goes crazy. But yeah, it's a bank holiday. It's really the only time you're going to have major consolidation with NASDAQ or indices as a whole. So that is our basic market structure. We'll go over advanced market structure. So the people that already know what higher highs and higher lows are, some of you might not. So that's why we got to go over that really quick. So now advanced market structure. LH equals lower high. LL equals lower low. Boom. Okay, we got that. Now for advanced market structure. Price is on uptrend, right? And then sometimes you see price come down. You're like, yo, like what's going on? Let me show you. Okay, so yeah, you've got our uptrend. But the thing is with advanced market structure, once you really get to understand it, you will realize that this right here is literally retail or just dumb money. Buying off this level and buying off this level of demand. Let me give you a better example. So they'd be buying off this demand. They'd like, oh, okay, cool. And then they'd buy off this demand. Thing is a continuation. But guess what? It's not. Price comes up. They're like, I'm going to get into it. Enter their buys, no confirmation, get took in the heck out. It's just simply the truth. Why? Because they don't realize that that's liquidity. You want to target the lowest level you can. And that's why we go over fibs. We go over all of our confluences. You're going to learn all that in this course. Right now, it's just market structure. So why do we see this? Because we see this not as structure. We see this as liquidity. Yes, it's making new highs, but these lows are not high probability. So if you were to enter this demand, you could win. But continuations don't last forever. You're going to get a break and you're going to lose. So the people that really know how structure works, they're going to see this kind of like a double bottom. They're going to say, okay, we're going to target this low down here. Say price, like this. Yeah, that's simply that. It's really easy to understand. Let me just show you guys a good example. The first one first show you guys because I feel like some of you will get confused, especially if you don't really know advanced market structure. Let's go on to today. Okay. So I came to the market today. Here I start trading at 930. I start really looking in the charts at 930 because I like to sleep in New York Stock Exchange really opens up at 930. So there's no point to trade before its setups do occur before it from like 8 to 9. But me personally, I'm not a morning person. The earliest I'm waking up is 9. I don't care what I have to do. I'm waking up at 9. So what do we see? Okay, this right here is all an uptrend. So we're making higher highs, higher lows. It's really not that good of an uptrend or an example, but got a higher low, higher low, higher low. Then you got a higher high, higher high. We'll count this as a higher high, higher high. Well, what happened here? Price is making higher lows. But what happened? Price made a lower low. My last low was right here and it broke it. Break structure. So now this is our lower low because it was lower than the last low, correct? So why is he saying this? You really got to read the market. It's not just structure, it's many other confluences. Right off the bat, I knew that this was going to buy from this area because price had to come back here. Price wasn't just going to take off from here. Why? Price right here, there's no clean structure whatsoever. You know you've got a downtrend right here, but it got broke because it's all liquidity. So the sell that I took right here, perfect, right? It's perfect sell. It's sell clean. Sold down to my demand zone. What happened? Price bought up, price hit the TP yet again. Why am I showing you guys this? Because the market isn't always going to give you a clean structure. It's not always going to be in your favor. The market is supposed to be against you. You know, they want to make their money off you. They're not trying to have you make money. So what do? They see new traders. They're like, it's uptrend. Let's take out the liquidity. Let's fake them out. Let's make a new high, right? higher high, higher high. So price is still making higher highs. It's still in an uptrend. People don't realize that. It's still in an uptrend. What does price do? Let's go back to our sells first. Just delete this. So I'm looking at sells. Just so you can kind of see like my mindset, but like behind everything I'm teaching you guys, how I clearly see the markets. So I saw this. Price created this tiny little uptrend, right? And then I broke it. We're on the 1 minute. Okay, doesn't mean anything. There's a gap down here. Price needs to come back down to tap into this lower low. It needs to test this lower low. And it will either break this lower low to make a new low, or it will test this lower low, make a higher low, and then continue in the uptrend. So we're literally looking at this sell right here. We're going to target this demand zone from the supply. Price is making higher highs. High, higher high, higher high, low, higher low, higher low, right? This low right here, the last higher low got broken. So we're pretty much trading minor structure inside the major structure because price on the major structure is still formed this higher high right here. So the last higher high, right there. This is last higher high. Price broke this higher low. It made what? A new lower low. Right here. New lower low. Right here. We want price to come back to tap into this area to retest this higher high. If it breaks this, it's making a new higher high. But the thing is, price needed to come back down to this demand zone because it needed to retest this lower low. Because it just made a high, now it's got to make a low. What do I see? I see a lot of stuff. So what we have for confluence with this trade, which was literally a couple hours ago, IPA, which is in balance, we'll go over that in another section gap in the market price, printed the supply zone with the higher right above it. So okay, cool. It printed an imbalance gap in the market. And we also had this. Is this a higher high? No. This is literally consolidation. Just like I said before, when it's consolidation, price takes out these people buying from this point. Okay. Price takes out these people selling from this point. Price then taps into our supply zone where we want it to sell from. Testing what? This last higher high with the supply zone filling the gap, the imbalance, just in the supply zone, taking out this liquidity and also taking out this liquidity. So this was the buy side because people were selling all in here, all going down. Oh, liquidity right here with sell side because people were buying from here, and then they got took out. Banks took out their orders. Smart money took out their orders. Price test into our supply zone, retest the last higher high up here, taking out the liquidity, and look what happens. Price then, which I mean this right here, price gave us an 11.5 RR. So say you risk $100, you're making $1,100 within 3 minutes. And this is what goes to show why I trade the lower time frame. I'm impatient, everyone trades a higher time frame. You don't need to do that. There are setups on the lower time frame that are literally exactly like the higher time frame. It just happens way quicker, it's simple. Can you get caught up more? Yes, but you can get caught up in the higher time frame too. You just need to know what to look at, which I'm going to teach you guys all of it in this course. Like I was saying, price came down and now tested this what? Lower low. Price came down. Test. Is lower low as horror as a horrible arrow? But that doesn't matter, we're not really worried about. That this was the lower low, right, the major lower low. This was the major higher high price, didn't make a higher high, it tested the last higher high, tank TP, hit price, tested this last lower low, the major lower low. Hit price, tested this last lower low, the major lower low. Taps into the demand zone, fills in all the gaps in here that banks needed to collect all their orders. Price took out the higher high. It's simple. If you know how to look at the market, it gets easy. It gets really, really easy. You know, it's if you really focus on market structure and you mark up every high, every low, it's going to get easier for you. I did that for a couple months and I really hammered down on my market structure because I'm going to be honest with you guys. That's all you need. If you have correct views on the market structure, if you know your correct views of point of interest, if you know where the market has to go, you're going to be set. As long as you have confluences with your market structure and your supply and demand, you're going to be golden. As long as you know risk management, if you have a good trading plan, which yet again, we're going to cover that in this course. It's going to be in the last section probably. So don't skip forward. Don't watch that. Watch it step by step because I'm going from basic to intermediate to advanced. Okay, so that was beginner structure. This is advanced. So once again, price was in an uptrend, but this is all retail. Okay, our only view we could have had was this demand right here. It didn't get tapped. So price was making higher highs, higher lows. Price took out all these orders up here that were buying from here, that are buying from here, that are buying from here. Because this is all retail trading. Let me show you guys. Trading support and resistance. Continuously, even on the 1 minute, price comes up, takes out the highs, price comes down, takes out the lows. Now, if we look at the higher time frame, it's still on an uptrend. Are we not from this point right here? I'm going to delete all this. If you guys need to go back, just go back in the video. That's why I'm making this. Look at the higher time frame, the 5 minute. We're still on an uptrend. We're still going up. So there's no reason for us to really look for major sells because price made a high and price made a higher low. So you go down on the time frames and you can see, okay, this is just either news or liquidity. I think it was news. I wasn't up. I didn't look at news because I just had no need to. There was enough news this week and last week. If there's a setup, I'm trading it. And guess what? There was simply because I looked at market structure and I know how to trade market structure. Some people could have sold from up here. We mark this up. Some people could sell from up here. But the thing is, on a higher time frame like the 5 minute, this is just a wick. This is liquidity. So if you're trading this, you're going to get taken out just like this. So then we see the new higher high print, higher high. We'll say lower low, but overall this is a higher low on the higher time frame. We had our minor channel along with our supply zone. Price has a little bit of a consolidation phase, taking out the lows and now taking out the highs, tapping into supply zone right here, just like this, to continue down to our demand zone. The last major low, because this is all just minor structure. We put that to our convenience. I don't know convenience. We traded to our advantage. Yes, I could say that. It's more into that. I don't know. I really know good language anyways. So if I can explain this to you guys and if you can understand it, anyone can understand it. Simply straightforward. If I know what to do, there's no reason you guys shouldn't know what to do. It took me a while, but that's why I'm teaching you guys this. Kind of help you guys, make you exceed a little quicker.
Can be profitable as long as you do the right thing, as long as you have the right training plan, and as long as you really know how to trade market structure along with the way that you trade, which is applying demand. You're set, you're golden. Major high, major low. You can consider this a lower low if you want, but same time price had to retest this lower low. Price retested this higher high, making a new higher high. So now this is our new major high right here. Price formed the supply zone with the gap in the middle of it with a little bit of consolidation, leaving some liquidity. Price took out the low. Price took out the high. Liquidity consolidation phase. Price retested the major high with our supply zone. Comes down, hits our TP. Goes into our next point of interest. Price taps into our demand zone, retesting our last major low, lower low on the higher time frame, higher low. And what does price do? Comes up to take out this high. Boom, simple. As that price makes a new high and continues up on the uptrend. Simple and easy. This is market structure. I hope you guys enjoyed, and next video we'll be showing you how to master liquidity like the institutional traders. It's literally in this play right here. If you don't see it, go to the next video, take notes, back test like a master. Please, I'm telling you, if you don't practice this, you're not going to learn anything. Just because you watch videos, just because you bought a course, it won't help you. As long as you put it to your own ability, as long as you practice it, as long as you trade the way you want to trade and learn how to trade it in your own way, you're chilling. So that's it. I hope you guys enjoyed this, and I'll see you in the next video.